Welcome to The Explainer. Today, we're diving into a pretty provocative theory that's been making the rounds online. It suggests that a hypothetical U.S. military raid in Venezuela wasn't about what you think. It was about economics. Now, let's be clear. We're not here to prove this right or wrong. We're just here to break down the logic of this one specific analysis. So, the whole analysis we're digging into today kicks off with this really powerful idea that the public story about democracy and freedom, that's the circus. It's a distraction. The real action, the real motive, is the bank vault. So let's crack open that vault and see what's inside, shall we? Okay, so what is in this bank vault? Well, according to this source, the raid had nothing to do with politics. It was a purely economic operation, and they describe it as a margin call. Now, if you're not into finance, a margin call is when a lender suddenly demands you put up more collateral because your loan looks too risky. And this theory suggests the U.S. was basically doing that on a global scale. So what this analysis is really arguing is that the entire operation was basically a foreclosure. It wasn't launched to liberate a people, but to liquidate a country's assets. Why? To grab physical oil and, more importantly, to defend the US dollar itself. To really get this theory, you first have to understand a huge problem brewing right inside the US. The source calls it the refinery mismatch, and believe me, it sets the stage for everything that follows. Okay, now this is where things get really interesting. The U.S. shale boom, right? It created this flood of light, sweet crude, kind of like the champagne of oil. The problem, well, decades ago, the U.S. built these incredibly expensive, complex refineries designed for the exact opposite, heavy, sour crude, the diesel stuff they got from places like Venezuela. So they've basically got the wrong factory for the stuff they're pumping out of their own ground. And to make matters even worse, the source points out that the U.S. emergency stash of oil, the Strategic Petroleum Reserve, has been drained to its lowest level in decades. The argument here is that this wasn't for some big war, but to keep gas prices down at home. So in their view, the emergency tank is pretty much running on fumes. So, you've got low reserves and refineries that are desperate for that heavy crude. Where do you get it? Well, according to this analysis, the options are not great. Canada's already pumping all it can. Russia? Sanctioned. Off the table. Saudi Arabia? They're starting to look east, not west. And that leaves one last domino standing. Venezuela.
All right, so that's the domestic oil problem. Now let's connect that to a much, much bigger global crisis that this theory hinges on, the potential collapse of the petrodollar system.
So what is the petrodollar system? Well, for about 50 years, it's been the bedrock of American power. It's basically an agreement that oil has to be bought and sold in US dollars. This creates this constant global demand for dollars, which the source calls America's exorbitant privilege. It means the US can just print money and essentially export its inflation. But, and this is a huge but, the whole theory we're looking at argues that this system is starting to crack badly. And this timeline here, wow, it really shows you just how fast this de-dollarization thing is happening. You see, it's not just one country making a move. It's a systematic effort by some of the biggest players on the world's stage, Russia, Saudi Arabia, the BRICS nations, to start trading for energy outside the dollar. They're chipping away, piece by piece, at the very foundation of American economic dominance. So you have this financial pressure cooker, right? And it's just building and building. Well, according to the source, it finally reached its boiling point because of a rumor coming out of Caracas. A rumor they call the financial nuclear option. So what was it? What was the red line, the final straw that, according to this theory, would trigger such an extreme military response? Here it is, the trigger. The analysis alleges that intelligence was picking up whispers, rumors that Venezuela was getting ready to price its oil, the largest proven reserves on planet Earth, exclusively in a basket of BRICS currencies, taking it completely off the dollar market. And you can see why Washington would panic, right? The source argues this would have been a disaster. It would send a signal to the entire world that a major oil power could not only survive, but actually thrive outside the U.S. financial bubble. And that could set off this exact domino effect. Venezuela sells oil in yuan, global demand for dollars tanks, U.S. bonds become worthless, and the whole American economy implodes. Okay, so the raid happens. Maybe it looks like a short-term win, right? You get the oil, you protect the dollar for now. But the analysis concludes by arguing that this tactical victory could turn into a massive long-term strategic disaster. And why is that? Because, according to this theory, an act like this shows the U.S. is changing its strategy. It suggests America can no longer compete and win on economic merit alone. So now, when you can't persuade, you resort to coercion. You're not leading anymore, you're just enforcing.
And this leads to a really chilling conclusion from the source. They say the petrodollar is no longer a trade agreement. It is a hostage situation. Think about that. The message it sends to every other nation with resources is terrifying. Your stuff is only yours as long as you play by our rules. Your sovereignty is basically conditional.
So instead of scaring everyone back into line, the source argues this does the exact opposite. It proves the critics right. It doesn't create loyalty, it creates an exodus. It pushes other countries to find non-dollar options even faster. It gives Saudi Arabia a reason to move its wealth into gold and yuan. It forces China to lock down energy routes that the US can't touch. It basically solidifies the very anti-American alliance it was supposed to intimidate. The raid, in this view, reveals the US not as a global policeman, but as a global pirate. The argument is that by doing this, the U.S. has torn off its own mask of the liberal international order. It's lost the moral high ground. How can you lecture other countries about sovereignty when, as this theory claims, you're willing to seize their assets at gunpoint?
And that leaves us with the final, really provocative question at the heart of this entire analysis. The oil might be flowing north, for now, sure. But by seizing those barrels to solve a problem today, has the American empire lost something far, far more valuable forever? Global trust?